Hello and welcome to another episode of Market Masters. My guest today is someone who's seen more market cycles than most of us have had hot dinners, but is still as curious, sharp and excited about the future as any first-time investor. Mark Mobius, the legendary voice of emerging markets, joins us once again. He may have decades of experience behind him, but his forward-looking views still make headlines. Mark has also authored a book. It's called The Book of Wealth, A Young Investor's Guide to Wealth and Happiness. It blends in investing insights with reflections on financial well-being. Mark, thank you very much for coming back on this program.
Pleasure being with you. Thank you.
Mark, before I start, let me just quickly recap some of your some of them out of consensus calls, right? And I'm going to list 5 of them, and then we'll sort of dive into how your thinking has evolved on some of the big issues. Number 1, Mark's call was India will overtake China as the world's second largest economy over a matter of time. It is a matter of time, according to Mark. Number 2, US manufacturing is coming back. It's powered by AI and automation and not cheap labor. Number 3, and this I found as sort of Mark as one of the lone voices when he made this call. He said US deficits may shrink and not explode. He was referring to, of course, tariff revenues. Number 4, and again, this is completely out of consensus, non-consensus, dollar will strengthen according to Mark. Number 5, China's official data can no longer be taken at face value, it is suspect. So those are the 5, sort of big calls, views, whatever you want to call it, but those are which kind of sort of stayed with me since Mark sort of spoke about them. Mark, thank you very much once again. A lot has happened since the last time we spoke. There's this 50% tariffs, which now, of course, have become reality. And it's kind of a waiting game between India and the US. It doesn't look like either side is going to blink. So I just want your thoughts on, why this has happened and what's the end game here? 25% base tariffs and 25% tariffs because of Russian oil.
Well, I think, Trump has gotten exasperating news from Russia. There hasn't been any decline in the situation in Ukraine, and this has made him very, very frustrated. So he's taking it out on India. He's hoping that India will help. But I'm afraid his hope is going to be shattered because obviously India doesn't want to give up its imports of oil from Russia. And at the end of the day, even with the big tariff increase that you're talking about, it will hit the exports from India. Maybe 40% of exports will be hit. And most important thing is that the big sectors that are going to be hit in India are the high labor content sectors, the jewelry, gems, garments, that sort of thing. Unfortunately, that will hit a lot of people, a lot of workers that need jobs in India. So hopefully the government can do something to alleviate this difficulty. But it must be remembered that pharmaceuticals, electronics are off the list. They will not have this tariff. So those exports will continue to the US. So impact on India from a GDP point of view is maybe 0.5%, at most 1% hit on the GDP. So when you look at it in the big picture, it is not going to be that big an impact in terms of the growth in India and in terms of the health of the Indian market.
Right. Mark, did I hear that correct? You're saying Trump will be disappointed if he thinks this 50% tariffs will work with India. I mean, he'll get what he wants by imposing this 25%. You don't think it will?
No, I think he will be disappointed. Now, of course, we've seen Modi holding hands with Putin. That is not going to be very encouraging to Trump. So obviously, the U.S. is going to have to step back. And I think probably they will begin to realize that India is not going to give in to the pressure. So I think Modi has given a clear message to Trump that he will not be pressured. And I think for good reason. I think India has got to stand up to this kind of imposition in terms of trade.
Yeah. But so what's the end game here, Mark? I mean, this 50% surely cannot be permanent.
No, I think they will have reached an agreement. I would give it maybe 2 or 3 weeks, and you'll see the U.S. coming to the table again and negotiating something with India, so that this is not going to take place. India may make some small concessions, but at the end of the day, it'll be the U.S. that will have to step back.
Okay. In your assessment, because this is a bit of an overhang in terms of percentage impact on GDP, it is small. It does, as you said, hit labor-intensive sectors, but it is an overhang, right? And it goes beyond tariffs and numbers, etc. I mean, this is a strategic long-term relationship which is soured. And hence, I'm asking this question. To your mind, this drags on for how long, you think, Mark?
I don't think it'll drag on too long. I'm talking about weeks where they will come to the table and reach some kind of an agreement. Because as you mentioned, the strategic partnership is very, very important to the US. And the US will have to pull back in some area, whether it be definitely on tariffs, but in other areas, they'll have to reach some agreement because the relationship between the US and India is very, very important to the US.
So you're saying a de-escalation with regards to these 50% tariffs, the secondary 25% basically is what is it? What's the issue here? That de-escalation it's a matter of weeks, according to you, Mark.
I think so. I think they'll make some agreement that will de-escalate this whole situation.
Yes. What is it? I mean, how is the US, finance industry in that sense, people who allocate large sums of money around the world looking at this? If you remember, Mark, till last year, I mean, there was almost bipartisan agreement that between Republicans and Democrats in the US that China is a big one. China is the rival, the big rival, right? And a lot of finance guys, fund managers, etc., they'd kind of sort of pull back from China. Under President Trump and under earlier President Biden as well. You don't think that kind of sentiment is there with regards to India, right? Because of what Trump administration and the White House is doing right now. It's very different, I'm assuming.
Oh, very, very different. You must remember, China represents a very, very substantial threat, a military threat. So that is definitely not the situation with India. India has shown that they are more interested in peace rather than in confrontation. So I think at the end of the day, China will continue to be a strategic concern on the part of the US policymakers and Trump as well. So I think it's a completely different situation, which is why I think accommodation will be made with India. The US and India will remain partners at the end of the day.
Yeah. And once this is resolved, right, you think this has done any, I don't want to use the word long term, but at least for the duration of President Trump's term now, remaining 3.5 years, you think it's going to remain a little tricky, a little tough? What's your sense, Mark? And this is not just about tariffs per se, but I mean, the entirety of the relationship.
I don't think so. I think that you must remember, India is becoming a very important manufacturer of electronic products for the US. As you know, Apple is manufacturing a lot in India now and will continue to do so and probably increase going forward. So we're going to see an expansion of that kind of activity. You're going to see more investment on the part of US companies in India. And, one of the positive aspects of this whole situation is that I believe that India, as you know, Modi has wanted to loosen up the incredible amount of bureaucracy that India has confronted the manufacturers in India with. And I believe that will begin to decline. India will begin to make some reforms in terms of the bureaucracy, making it easier for companies to come in.
Yeah, absolutely. Mark, you watched China for a long time. For the last 5 years, things were tense, right? Since the Galwan clashes in 2020 between India and China, no direct flights, all of that seems to be changing. Maybe, of course, in the backdrop are these Trump tariffs. China is tariffed at the highest rate. Effective tariffs, I think, for China are 42%. India's effective tariffs after exemptions is about 34%. But number one and number two. How do you see this relationship evolve? And if at least on the economic front, things can be normalized in terms of allowing Chinese FDI, access to markets, Chinese technology, for example, technology transfer. You think it could be a big one, or as we've heard from U.S. officials, top U.S. officials saying that they are surprised by what they're saying, what they're seeing right now, and they don't see this as a durable alliance, even of course as the U.S. imposes these tariffs in India. What's your sense?
No, I think policymakers in the U.S. realize that from a long-term point of view, China cannot be a partner with the U.S. They've got to continue to pressure China to open up their market to U.S. companies and to change their entire policy. But that won't be easy for for China to do. India will be a much easier partner for the U.S. because they have basic principles of democracy in place. China doesn't have that. I think that's a very, very important difference between India and China in relationship to the US. So now the hope is that the Communist Party in China changes into a more democratically oriented party, but that's not in the foreseeable future. That doesn't seem to be the case, at least the way things look now. Whereas India is a completely important partner, a different partner to the US, a much more democratic, open society. What has to happen, I think, going forward is India will have to reduce the amount of bureaucracy and the restrictions that they have, not only in foreign investors, but in domestic investors as well. So once that is accomplished, and I think Modi is working very hard to accomplish that, not easy, when you think about the differences between different states in India. It's not an easy task, but that is going to be a very big game changer in terms of not only Indian development, but in terms of India-US ties and relationships.
Yeah. No, you're absolutely right, Mark. What we're going to do, Mark, is stay with us. We're going to take a quick commercial break here. We're going to come back and continue this conversation. We've not even touched upon what markets are likely to do, in your opinion. So we'll do that on the other side. Stay with us. Well, we're in conversation with Mark Mobius here on another episode of Market Masters. Mark, before we get to the market, just a couple of things I want to clear out and get your views, right? Your view was US tariff revenues will be large and sustainable. Deficits will be under control, and there's no reason for the dollar to fall substantially. Are those 3 points, you still maintain those 3 points with what has happened over the last couple of months?
Yes, I do. I think you're going to see the U.S. deficit coming down as a result of the tariff revenue. And boss, you must remember also, there's been a lot of cuts in government spending in the U.S. That will be an important factor, but the most important factor will be the tariff revenues. And as a result, the U.S. dollar will get stronger. Well, you've already seen against some currencies, but for example, against the Indian rupee, the dollar is getting stronger. It won't be a substantial move. You must remember these currency moves, with a few exceptions, are not dramatic. You get 5, 10% change. But for the US dollar, that's a big, big change.
So sorry, 5, 10% change lower for the dollar?
Higher.
Higher. So,
Yeah,
Mark, you
yeah.
do realize this is a completely non-consensus view, right? Everyone out there thinks, at least the mainstream research houses, funds, we talk to everybody and they say, well, deficits continue to rise and the dollar, the one strong view out there is for a weaker dollar, if I can put it like that. So this is completely non-consensus.
Yeah, I just don't see it. And I noticed that gold has moved up pretty dramatically, about 5% in the last few days. So that's a lot of people think, well, hey, that means the dollar is going to get weaker. But I don't think so. From a longer term point of view, the dollar will get stronger.
You're sticking to that view. Absolutely. Mark, the big reason why US markets have done so well is this entire AI theme, right? The large technology stocks. We are starting to see a little bit of wobble. NVIDIA, by the way, is about 8% of the S&P, just one stock, on a market cap basis. Sam Altman
Yeah.
recently said AI investments is a bit of a bubble. Do you sense that at all? Or you think, I mean, this is the apex technology of our times and, I mean, it's the theme which will continue to drive US markets higher. What's your sense?
There's no question. AI is somewhat of a bubble in the sense that everybody is talking about AI as a big change, as a dramatic development in technology, but it's not. It's basically an acceleration of information flow of the speed that is possible by new chips coming into the market. But at the end of the day, there's no question that technology is going to drive what goes forward. And by technology, I mean not only chip design, chip development, but also automation, robotization of manufacturing. This is going to be the big change taking place going forward. And by the way, that's one of the reasons why the U.S. will be able to get a lot of more manufacturing into the U.S. market because of robotization. Obviously, labor rates in the U.S. do not compete with labor rates in other parts of the world. But when it comes to robots, a lot of the manufacturing will be able to be done in the U.S. So I think at the end of the day, it's not only about AI, it's about all the rest of the uh, developments that are taking place in technology. And as you know, in India, Modi has set a target for India to do more design of chips. I think the number now is about 20% of chip design globally is being done in India anyway. So I think more and more that is going to take place in India, and manufacturing will take place in India. And that will drive a lot of the technology improvements that we see coming down the pike. And not only in India, but in other parts of the world.
Yeah, absolutely. Uh, and design is happening, and I hope manufacturing picks up in a big way as well. There's a government push for that. Come to markets now, Mark. What's your view? You were north of 70% cash. You were waiting for those approvals to come in, and you said, "Well, I'm waiting for approvals in India." But I think you've deployed money
Yes,
now, and you're down to only 20% cash.
that's right.
Talk to us briefly about that, and of course, your view for the Indian market from here. For the last 1 year, we've been kind of flat at a headline index level. Go on.
Well, what I've done is I've accessed the Indian market, awaiting approval for individual stock selection. I've accessed through ETFs, Indian ETFs, and that's given us a 20% exposure to India. Now, what's happening recently, of course, is that China is beginning to outperform the Indian market. And as you know, a lot of traders are relatively short term. And when they see that, they switch over to China. But I don't think this will last. I think India will come back, and you'll see India outperforming again. Of course, when you go beyond 1 year, India is still outperforming the Chinese market. But I think that's what we have to look at in terms of short-term movements, because a lot of the investors look at that and they say, oh, India is going down against China. Let me switch over to China. That's short-term trading rather than a long-term development in the markets.
Foreigners have sold some $14 billion worth of stock in India, Mark. You think it's come to a climax now? When will things start to reverse?
I think it's going to probably take about a month or so for things to reverse when people begin to realize that the Indian market is doing well. And by the way, this will be related to what happens to the negotiations between the US and India. If you see a change where they come to an agreement, then you'll see a change in attitude towards the market, because the market definitely is watching and afraid of the shock that tariffs would have on the Indian economy. Of course, they don't really look at it very closely. As I mentioned, it's not going to be more than 0.5% to 1%. And the impact is not that great. But investors look at that and they get scared and they figure, oh, let's switch over to China or go back to the US.
Yeah. Mark, I have to ask you, are you still sort of betting on the same kind of businesses here as you were earlier?
Yes, I'm betting on the same kinds of businesses. The great thing about India is that it's such a wide selection of stocks that we now have. And of course, with recent IPOs, it's gotten even wider. So I can get exposure to any sector you may want to mention in India, which is not the case in many other parts of the world. So India is really a great place to invest, and is getting better and better as we go forward in terms of selection of companies.
Yeah.
And as I mentioned previously, I'm interested in companies that are using technology, regardless of whether it's healthcare, industrials, whether it's any other sector, as long as they're using technology to improve their efficiency, then we're interested.
Yeah. Mark, as we come to a close in this program, tell us a little bit about the book that you've written. I think it's meant for everyone, for new investors, first time in the market. Tell us a little bit about it.
Well, I wrote the book expressly targeted at teenagers and young people in their 20s who are just starting out in the investment area. So the Book of Wealth is really about showing how they can invest their money. I give them all kinds of choices. At the end of the day, of course, I say stocks are the best single investment, but they should also diversify into gold and other areas. But I also give them some advice on why they should look at their health, because at the end of the day, health is wealth. You can be very wealthy, but you're not going to enjoy it if you're not healthy. So it's a little bit of that and a little bit of advice on life generally. But I hope people will enjoy the book. I had a lot of fun writing it, and I wrote it just as if I was talking to any of my young friends. And I hope people can enjoy it. I appreciate your mentioning it.
I think it's a great thing. I'm going to get a copy for my kids. And Mark, I hope others do as well. Absolutely need to start early and really get a right framework to think about, the interaction between creating wealth and, of course, maintaining that balance with other pursuits in life as well. So look forward to reading that book. All the best of luck. Of course, I'm sure it'll do very well. We're out of time here, Mark. Thank you very much for joining us here on this episode of the Market Masters.
Thank you. It's a pleasure.
Thanks very much. Well, that's it from me, and that's Mark Mobius, the legendary emerging markets investor, still believes that India, these tariff issues perhaps gets resolved in the next few weeks, and that perhaps is also the time when foreign investors start to change their stance and stop at least selling first before they become buyers. That's it. Goodbye. Thanks very much for watching.